All right, all right. All right, guys. Sorry about that. My computer reset on me. My apologies. Just hasn't been the day for me with technology per se. Good afternoon. Welcome aboard to the aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Running about 4 minutes behind. My apologies. Let's get right to it. Let's get to work. Let's talk about this market. Um, what I've been doing today was mostly just research, kind of preparing for the investment club video we're going to have this weekend. I was going to do it this weekend, but there was a lot of reports that came out from the investment banks that I want to go over. Some JP Morgan, Deutsche Bank reports, and Barclays. I sent it over to the Discord community on the blog and investment club. If you're part of the investment club, take a look at that. There's a lot of things to go over. I want to see this NFP number on Friday. Tomorrow is the Fed meeting minutes. I'm not really too concerned about that, but most of the NFP is on Friday. I want to see that, see how we're looking in terms of Fed fund futures and interest rates, how they react. So again, that's what I've been working on today, just really just watching and reading reports, kind of see if we're starting to get closer to a bottom. What is the level that we're looking for? I know I've been saying 3,500 is a level that I'm looking for. A lot of volatility today. At the end of the day, and it's been a tough one. I mean, at the end of the day, look at this price action just this today. We had futures selling off, and I remember because I had futures long at 38.40. It basically round tripped it back to my entry. It was a stop run. 3,800 was my stop. It broke that, and then I got out. And then right at the 10 o'clock hour, we had straight green shoots to the upside, really carried by the NASDAQ. So let's go over it. The Dow fell 129 points today. NASDAQ up 1.75%. S&P up 0.16. The VIX eked out green, rejected 30 on the VIX. Let's go and take a look at that. Let's see here. Yep, we did reject that 30 level, 29.79. Equal weight S&P, again, a lot more value. We'll go over why that went down, down 0.24%. Small caps gained 0.83%. The dollar index soared today. That was creating pressure on the indices. Keep in mind, we were at this level just at 10 a.m. today, where we were at 37.50. The dollar index fell maybe 30 cents. That 30-cent fall, we had a jump of almost 80 points and 80 handles on the S&P. So again, the correlation may not be perfect, but it was very strange to see that NASDAQ caught a bid. Really, the only thing that I can kind of explain it here is yields. Look at the 10-year yields down to 2.809. We were a lot lower than that. We were at 2.780. So TLT, I'm long TLT. I added a position with Investment Club last week. Again, we expect TLT or government bonds to bottom before stocks do. So again, government bonds right now are being bid with recessionary fears. I've been posting a bunch of stuff on Twitter about it and also on Instagram. 119.34. That's your breakout point. That's a level I'm looking for to want to add it. I want to clear above maybe 120, 119. What is this? 119.64. Let's go ahead and clear 120. Then I'll start layering add into some bonds. 124, 123.32 is your 100-day. We cleared over the 20-day. We're cleared over the 50-day on TLT. Now we could see maybe we can start talking about a bottom, at least in bonds. At least that. Bond market is always first. That's the smart money. That's usually what we get in. High yield credit did not follow the NASDAQ today. So that's interesting. Again, they were red today, 0.09. Not terrible, but government bonds caught a bit. Investment grade bonds, pretty much flat. But yet S&P pretty much flat. So that correlation's there. Take a look at crude oil, down nearly 9% today. It was at the lows. Down 8%, 99.55 a barrel. That's the lowest we've had since May. Gasoline futures have been down 21 days in a row. Gas prices have fallen. We fell another 9% today, $3.35. You guys remember we talked about oil weeks ago. Overbought, 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 which is fine. I understand. Tough to trade, not a lot of volume in those options. But again, I'm still waiting for 90 to 95 a barrel oil. We can start layering in little by little in terms of energy stocks, especially the refiners who are very cash rich now. They took advantage of all this, taking care of some debt, the smaller ones. But I want to go over really the XOM, the CVX, the MROs, and the Oxy. Those guys I want to kind of focus on once we're at 90 to 95. 90.06 would be my support on crude oil. That basically gets us to that low that we had in February before the invasion of Ukraine by Russia. Gold futures were down 2% on a stronger dollar. Silver down 2.71% on a stronger dollar. Bitcoin up 6% even with a stronger dollar. Wow. Now, again, it is a proxy of the NASDAQ. NASDAQ's up, Bitcoin's up. Ethereum, higher beta compared to Bitcoin being beta, up nearly 9%, 1153. Again, still owning crypto, nothing has changed. Not too exciting, but that's where we are. So let's go and take a look at the heat map together. We'll talk about some price action. Let's go over that heat map together. Here's what worked today. Remember, Google will do a stock split on the 15th. So Google, Amazon, I don't even want to talk about it. I expected us to go a little lower. We had the 110 calls. We closed it at pretty much break even 1%, and then it started soaring. You're damned if you do, damned if you don't sometimes in this business, and it's tough because you have to make decisions based on the chart, and we were testing lows. So we went short instead. Amazon boosted up. Sometimes you're the dog, sometimes you're the hydrant. Look at energy today, just basically killed. Utilities basically killed. Industrials, the guys that have been winning during this kind of malaise, let's just call it this recessionary malaise, that's what was felt today. Industrials like Caterpillar, Deere, UNH, one of my favorite stocks to own, they took a step back today. But look at the names that did well today. Again, travel, Nike after their earnings, again, Netflix, Google, Meta has been beaten down before, up 5%. The banks are curious because now that interest rates, so when we had interest rates higher, banks were not wanted because, hey, it's too high, even though they make more money on yields. But yet now that interest rates are down, now the banks are dead money. I think banks are getting a lot more attractive. That's something that I definitely want to buy. Goldman Sachs is trading below book value, one whole book value. Citibank is trading 50% below book value. That was according to CNBC today. It was an interesting perspective. I do own JPM and I do own Goldman Sachs. I want to add to Goldman Sachs as we kind of slow down a little further. I think that we still get to 3,500. Earnings revisions are not there yet. Again, maybe we're pricing in some, but we don't know the forecasts. If we go by Micron and Nike, not the best. But in terms of guidance, the next real shoe to drop or the next real thing I'm looking at is really what the Fed is going to do with this information. If CPI comes in higher, again, guys, we're going to get more rate hikes. Even though we're seeing break evens fall, we even saw the inversion of the yield curve between the fives and the twos. So again, the shorter end of the curve, it got inverted. That's a recessionary signal as well. So again, not all is well, but again, are you now to the point of sell the news of recession or buy the news of recession, sell the news that things are getting better? It's a perspective thing, and that's a tough one to call because if we're just going by S&P futures, we have not done anything since last Tuesday, since that big drop. We haven't retraced that, anything. We haven't even hit the highs of yesterday on S&P futures. All we did was test this low of 37.40, 37.45, bounced back, got to around 38.40. Now the question is, does this sustain? Well, what has changed? We have some Fed meetings minutes tomorrow. Maybe that'll give us some kind of insight. But durable goods orders came in better than expected. So not real tons of news, to be completely honest. But at the end of the day, seeing energy come down that much isn't exactly good to see either, even if you do want lower gas prices, just for the simple fact that oil trading that kind of way, almost in a double digit sense, including gasoline, it just shows more than panic than anything else. And even in something where we want kind of lower prices, you don't want panic like that. That's very deflationary, and deflationary is a bad thing. Again, I know we always talk about inflation, but deflationary, that's bad. That's where you have zero demand. And that's where we're kind of in between. That's where we're kind of walking that tightrope, the Fed is, in terms of, hey, do we have massive deflation so everything gets back to normal, or do we kind of have a soft landing? That's kind of what we're going back and forth on. But energy being the one getting crushed today, technology catching the bid. Look at these names. Carvana getting squeezed higher, 26%. Peloton, 14%. Coinbase, 13%. Bitcoin being up. Riot, DraftKings, Roku, Mara, Snap. ARKK, again, a great barometer of hyper growth or risk on, was up nearly 9% today. And we've seen the outflows out of oil the last couple of weeks. I've been posting them. So again, not too much of a surprise, but again, falling 9% in a day is surprising though. Says we're going up tomorrow, John Harris. Yeah, I've been talking to him on the DMs, John. That's right. He was giving me his perspective on the market. He expects us to go higher. Again, there's still a lot of things that need to be seen. Of course, I feel a little frustrated because it seems like the goalposts keep moving. So if we get lower inflation, hey, that's a good thing. But then now it's recessionary, so we go lower. So now we're just getting a technical bounce. There really wasn't any good news that just came out or anything. Maybe you can hang your hat on the trade war possibly ending with China, maybe. But and that would have been priced in yesterday, and we fell as Europe recessionary fears took hold. So seems like European recession kind of wobbly economic stance. I know England's not part of the EU anymore due to Brexit, but they're not having the best time either politically. I posted some news about the UK ministers and such. Brian Johnson is still in power, but some of his deputies, I believe, are out and they resigned. I don't know exactly the reason why. I can't say I'm too into British politics, but again, it is news to watch. Obviously, it all matters in the end. Good afternoon, Carlos. What's your take on the Stock Traders Almanac reliable? Sometimes it is, sometimes it isn't. I guess it's kind of like reading your horoscope in a sense. It just reinforces your bias. Again, it's good to kind of report it. I like to report it to you guys, but to base everything on that, it's kind of tough to do that. It kind of is kind of a horoscopy thing. Oh, I'm a Scorpio or I'm an Aries. This is going to happen to me. Kind of vague. Yeah, sure. There's sometimes they'll say, hey, today's usually bullish. Today's usually bearish. you know, you can kind of flip a coin, same thing. And technical analysis is very similar to that. So take it with a grain of salt. I buy one every year. Again, I kind of use it as my calendar. But again, it is nice to read the data because it's important to know where we've come from, to know where we're going. Thoughts on 75 basis points till September? Tough to call because we have CPI next week. If CPI comes in a lot less than expected, that's not going to be 75 basis points. Reading the Fed and a lot of traders are expecting that in 2023, we're going to get rate cuts again. This will basically be 2018 part two, 2019 part two, where we basically are kicking the can again. We did a couple of rate hikes, and then 2019 we completely reversed it, and then we had COVID in 2020. So not very much reliable 24-month forward guidance in that sense. But at the end of the day, I do believe that the Fed is walking that tightrope. Politics aside, maybe there's pressure in the White House, pressure in Congress, who knows? But again, we know that the Fed, according to traders, and again, I posted this on the Twitter, that they're pricing in rate cuts for 2023, not even rate hikes. So 75 basis points is a tough one to see for September. But again, let's see that CPI number. If CPI comes in way better than expected, then the Fed may just say 50 or 25, kind of taper it off. If they see CPI is higher than expected, it ain't going to be 75, it'll probably be 100. So that's a scary thing there to look at. But again, there's so many moving parts. At the end of the day, guys, we're kind of missing a lot of information here. We're missing earnings revisions. We're missing some inflationary data. We're missing rate hikes if we get any more. And we're missing GDP. Because if we get GDP to come into negative, we're officially in a recession. In terms of Ulta's a good company, I think, and I used to own them. Would I want to buy them here? No, there's a gap to fill around 355. I think if you fill that, you could buy it there. That'll get us to 3,500 more than likely. So let's go ahead and wait for that gap fill. Technically, I would wait for this gap fill, Daniel, right around 356. If you want to start kind of buying some here, I wouldn't as of yet. I still think we have a little lower to go. If I hope I'm wrong, I hope this is the bottom. I just don't think that it is because we have more data to come. But if you're really about getting Ulta now, I think that you can hold off $20 per share if you wanted to. That is about a 7% move. I would wait, just be a little more patient on Ulta. I like it long term. They've been pretty strong. I also like a Sephora, but that's Louis Vuitton, Moet Hennessy, luxury brand. I would wait for 356 and wait for that gap fill. But good question. All right, guys, we'll leave it there. Have a great rest of your afternoon. I'm going to go back to my meeting prep and research. Have a good one, guys. Cheers.